All right, let's get right into it. Today, we're breaking down an absolutely monster quarter from Pure Storage. The company just dropped a powerful beat and raise report, and well, the market definitely noticed.
Okay, let's just start with the headline number here, because it tells you everything you need to know. A massive 16+% surge in the stock after hours. I mean, this wasn't just a small bump. This was the market screaming its approval of what Pure is doing.
So what was behind that huge pop? Well, it's pretty simple. A clean beat on both the top and bottom lines. They brought in $861 million in revenue, which was a solid $15 million more than Wall Street was looking for. And on the earnings side, 43 cents per share, that beat expectations by 4 cents. This is the kind of straightforward, no-nonsense execution that investors absolutely love to see.
But the headline numbers are just one part of the story. Let's dig a little deeper into the underlying strength that really drove this fantastic quarter.
At the heart of all this, you've really got two things powering the business forward: their overall platform strategy and this incredible subscription model they've built. And, the CEO, Charlie Giancarlo, he really hit the nail on the head with this quote. This sums up their entire game plan. It's not just about selling faster storage hardware anymore, it's about a fundamental shift, helping big companies rip out those clunky, old, inflexible systems and move to Pure's modern, unified platform.
And that platform is what they call the Enterprise Data Cloud. So what does that actually mean? Well, think of it this way. It's a software-first approach. They use their core software to create a single, simple, automated service for all of a company's data. No more silos, no more complexity. It basically gives customers a private cloud experience in their own data center.
Okay, now this is where things get really interesting. The subscription numbers. This is the recurring revenue engine, and it is firing on all cylinders. Subscription revenue is up 15%, ARR is up 18%, but the number you really want to pay attention to is RPO, remaining performance obligations, up a whopping 22%. That's $2.8 billion of future revenue that's already under contract. It gives them incredible visibility into the future.
And this chart right here, it just paints the picture perfectly. You can literally see the momentum building. RPO is leading the charge, which tells you that future growth is accelerating. This is what it looks like when a company successfully shifts to a predictable, software-driven business model.
All right, let's shift gears to what is, frankly, the biggest story here. The elephant in the room, in a good way, the strategic partnership with Meta. This has been a huge part of the bull case for a while, and now it's officially go time.
And there it is. In the second quarter, for the first time, Pure officially booked revenue from the Meta deal. This is a massive milestone. What was once just a promising idea is now actually hitting the top line. The catalyst is live.
And you got to understand, the way this deal is structured is just beautiful from a financial perspective. This isn't your typical hardware sale where they make, a decent margin. No. This is a royalty-based software model. That means almost no cost of goods sold, which translates to, get this, gross margins over 90%. That is pure, high-quality profit flowing straight to the bottom line.
And we're just at the very beginning of this ramp-up. It is not a one-quarter wonder. Management's talking about deploying 1 to 2 exabytes of their technology this year alone, and maybe even more. But then you look out to next year, fiscal 27, and they're talking about a double-digit exabyte shift. The key takeaway here is that this is a multi-year growth story that's only just getting started.
So, with a great quarter in the books and this huge Meta catalyst starting to fire, what did management do? You guessed it. They felt confident enough to significantly raise the bar for the rest of the year.
So let's look at the actual numbers here. They didn't just nudge guidance up. They gave it a serious boost. The full-year revenue forecast is now up to a range of $3.6 to $3.63 billion. That's a huge raise. And at the midpoint, it means they're expecting to grow about 14% for the full year. That is a massive signal of confidence from the top brass.
Okay, so we've looked at the quarter, we've looked at the guidance. Now for the big question. What's our take? What's the call on the stock from here?
Let's just recap the bull thesis, because it is crystal clear right now. You've got flawless execution with a beat and raise. You've got predictable, high-growth recurring revenue. Their core platform strategy is clearly winning. You have the massive high-margin Meta deal just getting started, and on top of it all, they're riding the huge wave of AI spending. It's an incredibly powerful setup.
So after a report like this, and a big jump in the stock, the question every investor is asking is, what's next? What is our call on Pure Storage right now?
All right, here's how we see things playing out. First, we expect this momentum to keep going.
Keep a close eye on those subscription numbers, especially RPO. If they stay this strong, don't be surprised to see another guidance raise down the road. Second, for the stock price, yeah, it's made a huge move, but this new, higher guidance creates a new, higher floor for its valuation. And third, the next big thing to watch for? News of another hyperscaler deal. If they can land a second major cloud player, well, that would be a complete game changer.
So, putting it all together, based on the rock-solid fundamentals, the massive multi-year growth story with Meta, and that significant guidance raise, our rating on Pure Storage is a confident outperform. The question isn't if they can execute anymore, it's how many more big customers are going to follow Meta's lead.
This is not financial advice.